Hi, this is Dale Crosby from Training Beyond Accounting. Welcome to the Engage program, where we invite thought leaders within public practice accounting to discuss how accounting firms are taking on a stronger advisory focus. Over the course of this program, we'll be considering how accounting firms can really engage their clients through value-added services. I'd like to begin by introducing today's special guest, Roman Kaczynski, Director of Accountancy Insurance. Roman started his public practice career in 1984, working in small and mid-sized practices before starting Halifax Business Consulting in 1998. It was during his time at Halifax that he was introduced to Accountancy Insurance, initially as the external accountants in 2004, in the early stages of operation, and later as a user and advisor on Audit Shield. Roman was an advisor on the Accountancy Insurance Board until 2009, when he became a director. He manages the underwriting agency side of Accountancy Insurance and also oversees the operations in New Zealand. Welcome, Roman.
Thank you.
In this session, we'll be talking about how firms can add value to clients by helping them to better manage their risk profiles. Roman, can I start by asking who the ATO is currently looking at in relation to benchmarking and risk profiling?
Thanks, Dale. Let's begin by reviewing what the ATO is currently doing in relation to benchmarks and risk profiling. In the good old days, the ATO used to broadcast their annual hit list, which used to be represented by categories of taxpayers grouped by either trade or profession or types of business, so typically teachers, airline pilots, salespersons, Chinese restaurants, builders, tradies, etc. And this hit list was compiled based around some anecdotal evidence that there were people, that these people were not as compliant as others, or merely there was some leakage in the tax system for this category of taxpayer. So now, as the ATO continues its move into the information age, the ATO targets more the what than the who. The ATO has made a sort of conscious decision to change their approach to compliance activities. So philosophically, they've tried to change the emphasis from only trying to catch the taxpayers after they've lodged the returns, to now also endeavouring to get their taxpayers to lodge their returns correctly in the first place, but still catching those taxpayers who are playing outside the tax net. The benefits of this correct lodgement in the first place is significant.
So how does this actually work in practice, Roman?
Sure. Let's look at some of them. Let's look at, say, data matching, for argument's sake. And let's do our own data matching on what they're doing. Now, the ATO collected around $8 billion from audits in the last year. So you can see from what size the carrot that is. And the government's going to continue to fund these initiatives given that size of the carrot. Now, IT improvements form a significant focus inside there. Now, and we've seen this number published a fair bit around the place, and the tax office have matched 660 million transactions in the last 12 months. Now, interestingly, of that, 500,000, so 500,000 issues were identified to look at. Now, inside that 500,000, they found 450,000 of those were issues where they were required to respond to. Now, that's 9 in 10 that they've looked into. Now, to put that in perspective, lots of them had no cases to answer once they went through the process. But that's still a significant number. ATO are considering many other revenue and are considered by many other revenue agencies, and including themselves, as being a world leader in data matching, processing, and technology. We've done some work in New Zealand and Canada and the UK with regard to our product, and in doing so, we've analysed and looked at some of the revenue agencies over there, and so that's the basis for us to sort of make the comment. They all regard the ATO in Australia. So, and interestingly also, the ATO is prepared to buy data to feed into this risk differentiation computer program that they've got. So then they're putting a lot of resource into it and looking to get a good return on their investment they spend on it. If we move on to the next one, benchmarking. So benchmarking is a key area for the ATO's risk profiling, especially in the area of the so-called cash businesses. Although they've come under criticism and more recently scrutiny by the Inspector General of Tax, since then the ATO has now had independent assessments that the methodology that they used to come up with their their benchmarks is appropriate. And more relevant is that the AAT have found in every case so far that the ATO benchmarks are an appropriate basis for which to issue default assessments. So benchmarking is here to stay. In line with the focus of prevention is better than cure, the ATO have got this letter program, and it's been a big hit within the ATO. All practitioners have received these letters, starting from the benchmarking letters back in 2010, now through to more recently the franking credit arrangement letters that are coming out. And they merely are a warning or an alert letter, bringing to the attention of the taxpayer that the ATO is looking into certain things which the taxpayer may have some exposure to, and at this point invite the taxpayer to make a voluntary disclosure. They don't require a response, but serve the purpose of making the taxpayer aware that the ATO is watching them and is aware of them individually. Very powerful. An example of how effective this has been, if I go back to those benchmarking letters, so in 2010-2011 year, they wrote to around about 30,000 businesses suggesting that, and only merely suggesting, that the taxpayers are trading outside of the relevant benchmarks. So without any further action by the tax office, the following year, around 5,000 of those businesses lodged their next returns within those same benchmarks. So that's not a bad result for the cost of a letter. It's an example of two initiatives, being the letter program and the benchmarking being used together successfully.
Okay, thanks, Raymond. So that's a good overview of where the ATO is at in relation to this risk profiling project at the moment. Obviously, more communication between the ATO and clients means inevitably more work for accounting firms. How do you think this program is affecting the way accountants manage their clients' accounting and tax matters? Is it more work for accountants?
Yeah, it certainly is. If we look at the trends now of what's happening out there, so with the improvements in programming and generation of more computer-savvy taxpayers in business, more and more taxpayers are processing and lodging their own figures. What used to be the domain of us as accountants is now shifting to the end client. Also, standard business reporting becomes a norm. As it becomes a norm inside the accounting packages, the need for accountants to process and lodge various forms and returns is reducing. So, as accountants, the trend is that we need to adapt to the changing environment. So, in line with the ATO's philosophy of getting the returns lodged right in the first place, the accountant's role will need to change from being a preparer and processor to being a system and integrity checker. The value here is helping the client make sure that their systems and processes are in place so they can lodge their own returns accurately, but also the value is in the fact that these businesses will have up-to-date and accurate figures, normally available via the cloud, and the accountants will now have a genuine ability to be able to provide real-time figures, KPIs, and assist those businesses into managing and optimising their opportunities rather than being a provider of out-of-date historical numbers.
Absolutely. So that moves really nicely into, I guess, the next part of this discussion, which really is on what this means in relation to how accountants can actually protect their clients and also add value through an advisory service that's chargeable to the client. So where can practices go with this? What sort of actions can they take to obviously protect their clients but also add value?
Sure. Let's if we break them down into two types of segments. So one is where the accountant continues to play a significant role in the preparation of the financials and finalisation and lodgement of those returns, and the other being ones where the clients are handling the processing through to ready to lodge stage and may even be lodging the returns themselves. So if we look at that first category, so this area really doesn't change much as the accountant is in control of the finished product. The greatest vulnerability is in the area of non-disclosure and non-disclosed income for businesses in the so-called cash economy. Here the relationship between the accountant and their client is paramount. So to protect themselves, each accountant is going to need to formally ask the questions about cash income that may not be provided in the records. So I recommend, as a personal recommendation, is that should be done in writing. So via email, just to and gauge a response back from the client to validate that their position, and also you have a record that you've been asked. as most accountants would know and should know, certainly, that the Tax Practitioners Board now have certainly got responsibilities on the tax agents themselves for lodging returns. So where in the past you can rely on the fact that the client signed the return and you've only prepared on information provided. Nowadays you've got extra responsibilities that you've got to take reasonable care in preparing those returns, and so you have some responsibility in the quality and the outcome. So some of the questions, some of the issues are sort of dealing with those, and some firms are getting down to the path of culling their client base to get rid of those non-disclosing cash income clients. So another thing that can be done, at the risk of sounding like a bit of a plug, accountants should consider putting Audit Shield into their business to take some of that financial pain from both the client and the accountant if the ATO wants to have a look at them. Also, I also recommend that accountants in this area should run the client figures against the ATO's benchmarks and highlight any discrepancies to the clients before the returns are lodged. This way the client can either provide some additional information and they have the opportunity to do that before the returns are lodged, or should an ATO review ensure as a result of those returns being lodged, the accountant pre-warn the client and should be in a stronger position to avoid any negative effect, either from the client or, as I mentioned previously, from the ATO via the Tax Practitioners Board. In our capacity as reviewers of tax audit claims, we believe there's a big trend, as I mentioned earlier, about accountants who are looking to get rid of clients who still live in the older generation. This is either in the form of trying to price them out, or basically just saying, look, we can't service you anymore. Go find somebody else. And on that issue, I think there's a trend that is going to develop that as this continues on, that we're going to find that, and to the tax office benefit, that a lot of the older style businesses who are happy to play in this cash economy and not declare the income are going to be slowly and surely herded into smaller batches of tax practitioners, and that's perfect for the tax office because, as we all know, they do profile practices. So they're going to be easier to be caught as well down the track. Also, more generally speaking, I believe the environment is right where the accountants should be educating and working with their clients to change the way of thinking about this information age, and that flying under the radar is no longer an option because that radar has really got a broad spectrum and big broad scopes. Now, if we go look at that second category, where the clients prepare and sometimes lodge their own returns, why don't we take the lead from the ATO and work with your clients about getting it right in the first place? So accountants and tax agents don't audit the client files or in fact provide any sort of assurances to their accuracy unless we're specifically engaged. Other than the normal balance sheet validations and the key account validations that we all do, it is then left to running the logic wand over the final figures before they're presented or used for lodgement. The proactive approach that accountants should look to implement in these types of clients is an internal compliance risk review of the client and their practices to minimise the risk of misaccounting. The value of this benefit benefits all the players in the game, from the staff member, in that they're provided with training and guidance in their roles and their responsibilities, benefits the client in that their staff are better trained and the owners can be more confident of accurate figures, benefits the accountant in that they have made a positive impact on their client and they can have access to more current figures for other value-add work, and finally they've generated an additional fee for what they do, and certainly benefits the ATO in that the returns are completed more accurately in the first place, which is their goal.
Okay, so there's obviously an opportunity to actually structure the delivery process through this in compliance risk review. Can you tell me a little bit more about what that actually means? What would a compliance risk review look like?
Sure. Now, and this is there's plenty of models out there that look to do this, and so this is my approach, and it's a fairly simplistic approach, and it's a good basic way to start. So broadly speaking, to undertake this sort of review, I recommend these steps that we can now see on the screen. Certainly, the most important aspect is that you must have the client and their staff on board with what you're doing and the need for it. So if you can't get them on board, you're fighting an uphill battle. So you need to get that sorted up front. Now, before you undertake that review, you need to spend some time and use your knowledge of the client. So we all understand our clients to a certain degree, and then assess the potential risks in the particular business. And I believe starting with the following three areas, and not limited to these three areas, but certainly starting with these three areas. So the first one is what I call processing risk, which just relates to how and who does the processing, what are their skill sets, what reconciliations and checks and balances exist along the way. So just the day-to-day processing. Then specific transaction risk, which relates to the type of business they are, or what's recurring or are infrequent transactions that exist that need some special attention, or their own processes or flags. So expenses paid out of the till for small retail businesses, for argument's sake, is one. Businesses who sell assets regularly, so they can be flagged or looked for. Legal expenses are repairs and maintenance and improvement type expenses, even salary packaging expenses. So what specific transactions exist in that particular business that need some special attention to make sure that they're being processed and captured accurately. And the last of my minimum list here is obligation risk, which just relates to the business internally being aware of their compliance obligations. So if the accountant isn't actually responsible for lodging those returns or preparing those returns, so are they fully aware of what lodgement responsibilities exist? What are the due dates for lodgement? Due dates for payments? How to calculate various obligations? How to calculate your base for superannuation for SG purposes? What about FBTs that involved? How is that being calculated? Wages declared for work cover or payroll tax? What are the payroll tax thresholds that the internal people need to be aware of and flagged as they start to be approached? So that's what I believe is in obligation risks. Once you've done your preliminary assessment, then you go about doing the complete review on the site and focusing on the areas you've identified, but also includes some generic areas like banking procedures, banking authorisations, what reports, if any, are provided to management, etc. Finally, once the review's been completed, document the review with assessments as to risk, and where relevant, making your recommendations. Now, those recommendations can obviously lead to opportunity to provide additional services to your client. So if we move now down to just having a look at some generic information. So to close off the discussions about ATO and other government agencies, here's a graph of our claims experience. Now, just to give you some background and introduction as to what this represents. So, as a provider of tax audit insurance, we process sort of around about 3,000 odd claims a year, and we've done over 10,000 claims over the journey of our existence along the way, and we capture those claims and graph them and keep the records of them. Now, with our broad base of 2,000 accounting firms across Australia, which is varying size from second-tier firms down to one-man operations, and inside those, with our broad offering concept that we do, that we get a representation of their client base, both size and industry types. So we believe our data that we're capturing is a cross-section of what's actually happening in the market there with regard to audit activity. So off the back of that, if we look at this graph, just to interpret it, the blue bars represent the claim numbers. So all the blue bars will add up to 100%, and they represent incidences of claims broken down into various categories. And the red bars represent the value of claim amounts we've paid. So the value of the professional fees that accountants charge to attend to these audits on behalf of their clients. So, and again, all our red bars would add up to 100%. So, as a representation. So, if we look at that, we can see that the most common claim item, if you like, or audit item, if you like, is the BAS reviews, and that takes no surprise. Everybody would be, if you had to have a bet on that, that would be the overall favourite easily by far. Interestingly, though, the second highest incident of claim always surprises me is the employer obligation audits. Now that's been the second highest now for the last couple of years, and it just staggers me that given that all employer obligation audits, predominantly all employer obligation audits, stem from having employees who complain to the tax office that they don't believe they've had their entitlements right. It staggers me that there's that many employers still out there who just don't get super right, and so that's sort of that represents there. We've had just anecdotally just talking the interesting ones we've had this year. We've had the dividend access scheme tax office activities and attacking practices themselves as far as getting access to their client base and who's set them up. That's been a big issue for us across this year, and I think it's just about finished there. I-returns, if we look at the I-return section there, it represents a reasonable line of activity. Now, for what we consider I-return claims to be, they include data matching, Medicare and health rebate reviews, pre-assessment reviews, rental properties, and work-related expense reviews. So, people who sit back and say, well, not much happens on the with regard to individual returns as far as audits go. In our stats, certainly suggest that there's a lot of activity. The cost to respond to those isn't high, judging by that red bar next to it, but certainly the incident of them coming up is reasonably high. Payroll tax, just looking at that, and I know we were talking about the ATO activity in general, but if we venture out into some of the state-based ones as well that we captured information on, payroll tax has pretty much stayed steady as an overall between the last couple of years. But interestingly, when we break them down into the states, New South Wales and Queensland definitely on the rise as far as activity, whilst Victoria and Western Australia are on the decline as far as activity goes. That's our experience over the last 12 months there. Work cover, just to share that one as well. Work cover is New South Wales work cover activity has fallen by about a third from what it was in the previous year. So that's a significant drop in activity in New South Wales, and all other states stay about the same. High wealth is back. So there was a little bit of a hiatus where there wasn't a lot of activity from the tax office with regard to high wealth clients. I can tell you that they're back, and they're not cheap when they if you come across a client who's being looked at from a high wealth perspective, they can be expensive responses. And the last one I'd mention on here is pretty much the capital gains tax issues, and particularly the small business concession claims. They've doubled on what we've had in the previous year. So I'm not sure what the motivation is, whether it's a target within there, but certainly the amount of activity in that space validating some small business concessions has doubled on the previous year, and they go back 3 years when they're looking at them.
Okay.
So that's sort of the thing.
Yep, no, really interesting data, Roman. Thanks very much for presenting that data, and also really for your insights today. There's no doubt there's significant opportunity to add value by being proactive in managing clients' ATO risk profile. What can Accountancy Insurance do to assist with the process?
Sure. Our product is really about taking the angst out of it. So why not take the financial angst and all the write-offs that out of assisting your client through an ATO audit and review. That's what our product's about, ensures against the professional fees that you would otherwise charge your client, so that the value is to the practice and to the client. And sort of if you want to find out more about how we can help, we've got over 2,000 firms in Australia and New Zealand already use us, and that number is growing steadily. The easiest way is just shoot us an email through inquiries@accountancyinsurance.com.au.
That's great. Thank you very much again, Roman. If you're interested in further information on how you can develop your advisory platform, also take a look at the Make It Happen coaching program and other advisory programs available at trainingbeyondaccounting.com.au. Thank you for listening to today's session, and please take a look at our other recorded presentations in the Engage program. We will see you soon. Thank you.